Hey everyone, welcome to another episode of Wallet Wisdom, a podcast presented by Lake Michigan Credit Union. If you're new to the podcast or have been listening for a while, Wallet Wisdom is a podcast designed around breaking down the ins and outs of financial aspects, as well as helping bring answers to some of banking's more confusing and complex questions. I'm your host, Brett. Sharing the mic with me again, the very talented co-host, Kelsey.
Hello.
Hello. And running the board for the first time on Wallet Wisdom, producer Paul. How are you?
I'm good. How are you?
Good, guys. You guys doing good?
Dandy.
Dandy. Good.
Wonderful.
Good. Well, we're going to have a great show, as always. We have the extremely knowledgeable Meg Dunn in the studio with us today, giving us some tips on how to finance that 4-bedroom, $250,000 home you've been dreaming of. Meg, welcome to the show.
Thank you.
How are you?
I'm excited to be here. Thanks.
Good, good. Well, we've had a chance, of course, for the last few years now that I've worked here to work together on some projects, and your knowledge of mortgage and all things home related is just incredible. So we're really glad that you're here to help listeners break some things down for us.
Well, thank you. I feel like you're setting the bar high for me to get right out of the gate, but okay.
Nice.
We'll go with it. That's right.
Well, just kind of tell us a little bit about you and just kind of your history here with the credit union, and yeah, tell us a little bit about that.
Sure. Well, I have actually been in mortgage banking for about 28 years, which is crazy. I've been with Lake Michigan for the past 10 years, just actually celebrated my 10th anniversary here at the credit union.
Congratulations.
Nice.
Thank you.
Awesome.
Yeah, celebrated it during COVID time. But yeah, so it's been quite a progression and extreme growth for us during the last 10 years. I think when I started here, we had 12 loan officers, and now we have about 115.
That's incredible.
12 seems impossible these
Yeah,
days.
I know, doesn't it? I mean, it's like a small team for us is 12, and now, 115 loan officers, with sales support staff, we're probably close to 150 in our sales management team. So just we've assembled an amazing team of people that represent us well in the communities, and it's been so much fun. It's been a great ride, and anxious to see what the next 10 years brings.
For sure. That's awesome. That is amazing to think in 10 years, the amount of growth that's happened. I mean, what a different place it must have been. And then to see where we're at now, it's just pretty incredible.
It is. I mean, I remember when we started and we'd close 30 million in a month. We're like, yes, look what we did. And, we have some days that we're doing that in a day now.
Which is incredible.
Oh my gosh.
So it's incredible. And, great leadership. Eric Burgoon has been a great leader throughout all of this, and just, assembling a fantastic group of people from not just sales, it's operations too. So it definitely takes a village.
For sure. And I think that's probably a great point. There's so much that goes into the mortgage process than just loan officer, and there's the people behind them that's doing a lot of work, getting things prepped and getting all the paperwork together and all the people that make that happen. So it's incredible.
It is. I mean, it's, the loan officers and the salespeople are really the face of the operation, but, they're a small piece of that. We have a huge team behind us that, we're seeing record growth and record volumes this year, as most mortgage companies are. And it's, our processing, underwriting, closing teams has just been incredible. They've been putting in a lot of hours, many of them still working from home, and couldn't do it without them. So.
Yeah, I'd imagine with COVID-19 and what we've been going through these past few months, it really has kind of shifted and shaped the overall landscape of how mortgage processing is done. And I'm sure that's been really unique to see the innovation and how we can keep helping our members and listeners.
For sure. I mean, it was a quick process to get everybody home, and people that were normally used to working in the office, and say, okay, we're moving you home. And we did that fairly quickly, and we got everybody up and running, and they did not miss a beat at all. We were shifting everybody home while recognizing unprecedented volume, and they just did not miss a beat. And I think that we were actually very productive for being at home, and maybe even more productive in some of those months when, let's just be honest, what else was there to do?
Right. No kidding.
Might as well close loans.
Right. I mean, we were at home working, and okay, I'll take a break. Maybe I'll make some dinner, or I'll do some homework with my kids, and then it was back to working again because there was
Yeah.
nothing else to do.
For sure.
So, yeah, like I said, it's been a record-breaking, unprecedented year, and I think everyone's a little tired at this point.
Right.
Probably ready for a break. I don't know if we see that coming anytime soon. Rates are still really low, and we're still doing a lot of volume. So, hopefully they'll get a break at some point, but not quite sure when that's going to be yet.
For sure. Well, and you're being modest too, because this was unscripted, this part, but I was just going to bring up something that LMCU just had a chance to celebrate, which was our dedication to wanting to help those in our communities that may be suffering with COVID-19 and the repercussions of that with food and just the needs. And we made a dedication that we would donate $50 for every closed mortgage during the months of July. Is that right? June and
Yeah.
July?
Really what it was is that it was, we work a lot with realtors and builders, and a lot of those businesses were shut down right at the beginning part of COVID. And we really wanted a way to engage them when their businesses opened back up again, and we wanted to engage them to work with Lake Michigan Credit Union. So kind of had some conversations as to how does that look? How do we do that? And we said, you know what, let's try and make this so that it's trying to engage those business partners back with us, but do good at the same time. We're having a record-breaking year, right? And a lot of times that means, increased income for the credit union. And we know that although we're benefiting, there's a lot of people hurting right now.
Yeah.
So we decided to focus on food insecurity, and we picked 6 different organizations throughout
so cool.
Michigan and Southwest Florida. And so what it was, Brett, it was for the months of May and June.
May and June.
So for purchase or construction loans, for new applications we took in those months, when those loans closed, we would donate $50 for every closed loan. Happy to say that it equated to about 2,200 loans, so about $110,000.
Man, that is so cool.
Yeah.
And just to know that those dollars are going to really help people that are out there that are listening to really, if they need support, we want to be a partner in that. So I think that is just so cool. And what an amazing amount of volume in just 2 months. I mean, like you said, a little over 2,200 loans closed. It's just incredible.
Right.
So-
And that was just the purchase and construction volume. I mean, there's still refi volume that was tied to that. And yeah, I mean, I couldn't be more proud that we chose the food insecurity. The stories that we heard while meeting with each one of these organizations was incredible. And, they all pretty much echoed that normally they have, in their communities, about 14% of their population needs food assistance.
Sure.
Wow.
And during COVID and even continuing right now, that number has risen to about 40%.
Wow.
So people needing food for the first time, never having to ask for help. And so it's humbling for many people, and just great feeling. Then, just kind of ties in with what Lake Michigan always tries to do is, help the communities that we work in.
Absolutely. And for those that are listening that may not know much about Lake Michigan Credit Union, we are absolutely invested in our communities and with our philanthropic opportunities with nonprofits. So it's definitely a major part of our DNA, and it's just another example of that. So that is so cool. Well, talking about exponential growth and everything that's happened in the last 10 years, as families are still growing, they are looking to expand into bigger homes and larger homes. And you're here to kind of help us just with some tips of how to finance that 4-bedroom, 250,000 plus home that people have been eyeing or dreaming of, and maybe just giving some practical advice on how obtainable that really is. That's why we have you here. So we're excited to dive into that.
Yeah, definitely. I mean, think about how we all probably reevaluated our home situations. Well, we were all locked inside, right?
I just bought a house maybe 3 years ago. So my whole idea is I've been seeing way too many projects I want to do.
Okay.
I want to blow out some walls. I want to add an addition. I want to do all this other stuff. But my parents keep saying, if you're going to do all that work, why don't you just find a bigger or a home that you really want that's better and fits you better? So,
Yep. People wanting, never had a home office before. Oh, I need a home office. there's not enough separation. It's too open. I need more,
You need a playroom for the kids so they're not so
Exactly.
close.
Yes.
I need places for the kids to be homeschooled, all of those things. And so I think it really, we were kind of joking around that COVID was going to cause people to either, want a bigger home, right size. Hopefully people, stayed married after COVID and they didn't need to find an additional home. But,
Knock on wood.
knock on wood. Or, people that, their families grew during COVID. And so now we
Yeah.
need a bigger home.
Yep.
So, lots of opportunities for, reevaluating. I personally, during that time, my husband and I reevaluated and said, this isn't working for us anymore. We, sent 2 of our kids off to college, and we're in the process of building our next phase home that's going to
Wow.
be right sized for what we're looking for the next
Right.
15 years.
That's
So,
awesome.
yeah.
That's so cool. Well, can you kind of help our listeners break down some of what those ideas and some of those tips look like?
Sure.
And even like taking us through kind of the overall process of, what they kind of need to be thinking about if this is the next step they want to take.
Sure. I think one of the big things is that people always think I need to have this huge down payment in order to buy a house, right? And I think a lot of times that comes from parents because when our parents were buying homes, they needed that 20% down.
Right.
Sure.
And so I hear many people say, "Oh, I want to buy a house, but I don't have 20% down." You don't need 20% down. Is 20% down great? Sure, because then you don't have to carry private mortgage insurance and you might save a little bit. But you can do anywhere from 3% down to 20% down to however much you might have. But down payment should no longer be the obstacle to buying a home.
Yeah.
And I think that, saving a little bit every month, putting a little bit away, you can get to that 3%, fairly quickly.
Sure.
And so down payment really shouldn't be an obstacle. Depending upon your, your situation, your demographic, where you live, there's even down payment assistant programs out there in different cities that could help you with those down payment funds. Some of the down payment funds can come from a gift. So if you have some family members, things like that.
Very
So
nice.
really don't let that be the barrier
Sure.
to moving into a new home.
Well, and I wanted to ask too, so like you said, we don't have to necessarily come to the table with 20%. And like you said, there's options that can go all the way down potentially to 3%. But is there kind of a sweet spot that maybe you would recommend to listeners that would be maybe that healthy spot to like look at?
Sure. I mean, I know the national average is around 6%. I
Sure.
think the national average is 6% down payment. I think it really just, there's no one size fits all.
Sure.
Right.
And I think you really have to sit down with a loan professional, a loan officer from Lake Michigan Credit Union, and just go over what your plans are. How long are you looking to stay in this home, right?
Sure.
Is this just a transitional? Is this your forever home? If you have funds available to you, do you need them for other projects, other, education for your kids, or can it all go into the home? What are you looking, how much payment can you afford each month? So there's no right size, this is the perfect sweet spot. I think there's probably a sweet spot for every borrower, for every member. It's just not going to be the same for every person.
I think that's really wise. And I think everyone listening can kind of relate. We're all in different stages in our own stories of our life, and knowing that it isn't just a one size fits all. Because sometimes you're right. We hear it's got to be one way, and then or no way. And I think it's good for our listeners to recognize that. So yeah, for sure. Now, one thing that I just wanted to bring up too, that we've done several episodes around mortgage related things. And the one constant that we hear through every single podcast is talking to a loan officer and getting your questions answered. Don't just assume what your parents have said or what a friend said is going to be the same for you. And so if listeners are out there, questioning and have a lot of questions, remember, like, seriously, talk to a loan officer, get that process started there so you can ask those questions. LMCU has like you said, a huge number of loan officers available all over our communities. And they want to answer those questions.
Yeah, definitely. And I think, we live in an age right now, right, where everybody wants to go out there and do their own research. So much is at our fingertips online, and
Yeah.
I can research down payments, and I can research, credit scores and, debt to income ratios and all of that. And that's good to have that knowledge. But like I mentioned earlier, everybody's story and everybody's scenario is different.
Yeah.
So to interpret how those things that you're reading apply to you and what that means personally for you and your family, I think you really do need to meet with the loan officer. And, our loan officers love doing that. They love meeting with our members. They love kind of trying to find the right product and program that's going to meet your needs.
Sure.
So, whether or not you, walk into one of our branches, we've got loan officers in all of our branches. You go online to lmcu.org. You can search for a loan officer there, find one that's convenient. You can schedule an appointment. It can be face-to-face, over the phone. You name it, we're going to find a way to walk you through this process.
And let me ask you one other question, because I'm just, even for my own self, and maybe for what maybe some listeners are thinking too, just because you're getting in touch with a loan officer does not mean that you have to be truly active or really ready to buy a home, right?
Absolutely not. We're not going to, ask for your firstborn child or, your blood type or anything like that. No, I mean, it is really just that. It is just a discussion.
Yeah.
And there is no commitment. You're not signing any paperwork. You're just saying, listen, tell me what this means for me. If this is how much I want to put down, what does that look like payment wise? And for many people, it's wanting to know before they even start that home search process, how big of a home should I be looking for?
Sure.
Right? I'm watching HGTV all the time, and I see these homes and they're gorgeous. And can I get that for $150,000? Or do I qualify for $300,000? And I don't think the common person or the everyday person knows how much home they qualify for.
Yeah.
So before you start that home process and you get your sights set on a home and you get your heart set on a home that you can't afford, or vice versa,
Sure.
you're selling yourself short and you're saying, oh, I can only afford this, when really you could probably afford a little bit more. That's really important.
Yeah.
And no loan, it's, no commitment, it's just a discussion.
That's awesome.
Yeah, because you'd hate to be out in the market looking at a $300,000 home that you absolutely love, only to find out you only get pre-qualified for $225,000 or something.
Right, exactly.
That would be heartbreaking.
There
I
goes
feel
the
like.
granite countertops.
Yeah,
and,
Right,
You have to
exactly.
install those
Right.
yourself.
Yeah.
Yeah.
Yeah, that's a really good point, Kelsey.
And I think it's also, you mentioned just getting in touch with a loan officer to ask those questions, just to learn more. We don't always get taught what we need to know going into a situation. And if you're thinking about these things, or you're setting goals to eventually accomplish, it's good to get more information from an expert who can help you set healthy goals and maybe steps to get there, especially like you mentioned with like DTI, and understanding like what of the debt that I have is going to hurt me and what is not going to hurt me in that process. And I think it really brings us to the next little tip that you had mentioned is, understanding a little bit more about your DTI.
Sure. Yeah, I mean, DTI, we use a lot of acronyms in the mortgage business, but DTI stands for debt to income ratio. And it's just something that we're looking at to say, okay, what's your income that your family is bringing in on a monthly basis? How much then is then going out towards debts, including your mortgage payment, car payments, credit card bills, and things like that. And, there are ranges, that you'll want to see, for approval, 36 to 40 to 43 is probably, where you want to be in that range. But once again, lots of other factors that figure into that. How much money are you putting down and different things?
Sure.
But what you really want to look at and say, and a loan officer can help you with this, because you might come to them to have that initial discussion that we were talking about, and they might say, wow, you've got a lot. You're kind of, stretched thin right now.
Sure.
Here's a plan. Why don't you work for the next couple months, pay down these credit cards, pay off these credit cards, pay off that car loan, and then come back and see me,
Yeah.
right? Or you might find that you need a little bit of credit repair. Maybe you've had a couple blips on your credit, a few late payments, things like that. And that could hurt you.
Sure.
That lower credit score could hurt your interest rate, and it could, be a little bit more costly. And so loan officers are going to be able to do that for you. They're going to be able to give you that advice to say, you know what, spend the next couple months doing, A, B, and C.
Sure.
Or even if you don't have the down payment, here's what you can do to save, X number of dollars every month. So they're really there to be that financial guide
Yeah,
through the
partner, it seems
process.
like.
Yeah.
Yeah,
Yeah.
someone that's really going to partner with you and help you achieve the
Yeah.
goals for, home ownership.
I mean, let's be honest, buying a home is an extremely emotional experience.
Yeah.
For sure.
Right?
Yeah.
It's one of the biggest purchases you're ever going to make in your life. It's highly emotional. And we're the experts. We need to walk people through that. I've even seen people that I've worked with for years in the mortgage business. All of a sudden, everything they know goes out the window when it's their own personal loan, right?
Sure.
Because it's so emotional.
Yeah.
And so we have to keep that in mind when we're working with our members that for some of them, we do this every day. They're doing this once every 10 years.
That's
Or
true.
maybe even for the first time.
Yeah, or
Good
the
point,
first time.
Kelsey. Yeah, or for the first time. And so they don't know what to expect, or if they haven't done it in 10 years, guidelines, things have changed. So we really have to put ourselves into their shoes and say, okay, we need to break this down and make this, stop using those acronyms and stop talking that mortgage jargon and really make it an enjoyable process for them.
For sure.
And I think a lot of people get, nervous about talking to a loan officer in the first place if they know, oh, my credit score is already low. I don't have a 20% down payment. They don't even bother talking to somebody. They just say, I'll keep renting until I get this figured out. But I mean, it makes sense to just have the conversation. And like you said, they can give you a plan of action for the next however many months.
Right.
To get you to that home ownership stage.
Well, and even to that point, with credit scores, there may be certain loans you own that would be better to pay off first rather than something else that won't impact as much for the loan process of buying a house. So I think you're absolutely right. Getting in touch with somebody to really help understand what should I attack first and really create that ABC list that you mentioned, Meg. And I just wanted to also let listeners know, as we move beyond DTI, we did have a great podcast, our last episode with Alicia Force, who came in, talked about DTI as well. And if you're looking for more in-depth understanding of what debt-to-income ratios look like and how it affects you, check out our last podcast. And, we are also looking at, in the near future, a podcast more dedicated around the more in-depths of credit scores. But as we're still on that topic, Meg, can you help me understand how credit scores really are a component in the process?
Sure. I mean, there's the C's that you talk about. It's, credit, collateral, collateral being, the home that you're buying, the value. Credit is an important component, right? We want to see people that have established credit, that, you don't need to have a ton of it, but you have to show that you can make payments, you can make them on time, and that you can, pay your bills responsibly. So we are looking for that. That's not to say that if you've ever had a late payment that, oh, I'm not going to be able to do this. That's not the case. But, credit scores, I would say, a 720 credit score and up is great. Really good means you're handling your debt responsibly and so forth. If you're under 720, doesn't mean that we can't help you. We might need to do things a little bit differently. You might need to put a little bit more money down. The rate that you pay might be a little bit higher, but 720, I would say if you have a 720 credit score or higher, you're in really good shape.
Sure.
If it's below that, like Kelsey and I were talking about, you can always have a loan officer kind of advise you some things that you could do. To your point, Brett, what should I pay off? What should I pay off sooner? That would help me improve that score.
Sure.
And we'll get there. But it is a component. I mean, credit is a big component, right? We're lending out a sizable chunk of money, and we want to make sure that you have the ability and the responsibility to pay it back.
For sure.
So I have a question for maybe some of our younger millennial audience with a lot of student debt. Do you think it would be wise to be looking into getting a house, or should you maybe think about getting the student debt taken care of first?
I don't think student debt should be a deterrent, because depending upon the type of student loan that you have, and if it's deferred, that might not even affect you in your DTI ratio to get a mortgage. Now, if you want to get that loan paid off and all your excess funds are going towards paying off those loans as opposed to saving for your down payment, then, that might be something, to focus on. But we help many people with student loans, and we have a great doctor loan program too, and we help a lot of doctors that have a lot of debt in their student loans.
Sure.
Right? Let's just be honest.
Right.
And we've got programs for that as well, for through our doctor and dentist program that defer, and we don't count some of those student loan payments. So that should not stop people whatsoever.
Yeah.
That's great.
And I think that it's a great question, because I think there are a lot of younger audiences listening right now that are in maybe that stage where, I'm 25, I'm maybe a couple years out of college now, and I am ready to make a step towards home ownership. But geez, I got what seems like a lot of student loan debt piled up and all the rest. But one thing that I just want to touch on again, Meg, that you said is, we're here to help people. It's not a business transaction. We want to make sure we're setting everyone up for success, because nobody wants to lose their home. Nobody wants to have that happen on both sides, whether it's the banking industry or the people themselves. And so we have a moral responsibility to really make sure that we are helping people make the best decision that's going to set them up for the best success, which I think is one of our strongest parts of who we are.
Absolutely. And we see that with our members. And you'll look at some of the loans that we do, and these members, this is their third, fourth, fifth loan with us.
Wow.
Right? They keep coming back to us, and we might have helped them when they were just starting out with their first time home, and their family's grown, and they've come back to Lake Michigan because of the advice and the service and all of that they received. So absolutely, we're in it for the long term. It's a partnership. It's not a transaction to us.
That's cool.
Yeah.
That's really cool.
Do you have any tips for today's market in particular, being that it's so competitive right now? Kind of going in as a first-time home buyer or a fourth-time home buyer, whatever it might be, how to kind of navigate that market, or things you should be doing differently?
Yeah, I mean, it is very competitive right now. Particularly in the Grand Rapids area where we're located. Not a lot of inventory right now, especially in if you're a first-time home buyer, especially in some of those first-time home buyer markets. What I would suggest, and I think is really important, and we touched on this earlier, is work with a loan officer and get pre-approved.
Yeah.
Right? Because if you're one of, 5 offers on a house, and you can show that you have a pre-approval, you've already met with a loan officer, your offer is going to be much more solid, and the sellers are going to be much more apt to look at your offer, even if you don't have the highest offer, but you're pre-approved and they know, okay, this is a sure thing.
Right.
You're going to have a better chance of doing that. And realtors love that too. Right? They want to make sure that when they're going out and showing homes and spending their evenings and their weekends showing a home to somebody, they want to know, like you said earlier, Kelsey, why am I looking at $300,000 homes if I can only afford a $225,000 home? So it helps that process to know what you're looking for, how much you can qualify for, strengthens your offer. And I think it really helps improve your partnership too with your realtor. And, let's not leave them out of this equation either, because another huge important part of the process. Yes, as we mentioned earlier, so much information out on the internet, right? That you can look and say, oh, I can find homes. But I can tell you 100% that realtors make the transactions so much smoother.
Yeah,
They're
they
going to be able to help
absolutely
you, guide you through the process. And, it's not just about, oh, they showed me a pretty home. What they do behind the scenes to help you, just like we do on the financing side, they're doing it on the negotiation side. So, they're definitely a key partner in the whole transaction. So find a good realtor, get pre-approved, and be ready to act fast.
Yeah.
Because the houses are not staying on the market very long.
No.
Oh, man.
How far in advance should you get pre-approved before you start looking for a house?
I mean, it's a great question, but it could be, 6 months. It could be a year. It might take that long sometimes to find the house that you want. We're going to want to update that We're going to want to re-pull your credit. If we didn't pull your credit, the last time we did it was a year ago. We might want to do that again right before you put in your offer. Make sure you haven't done anything crazy with your credit since the last time we met. But, some people, if they're just starting out, they might have no idea what they qualify for. So talk to somebody now, get that. There's a difference between, I just want to have a conversation with a loan officer and sit down. And as we were talking about before, it's not scary, no commitment, and being pre-qualified. So you can have that conversation and just kind of have that verbal with a loan officer. But then if you really want that sheet of paper that says, I've been pre-qualified for $250,000, you're going to need to supply a little bit more information to the loan officer to get that. But there's really no right or wrong as to when to do that. It just depends on how serious you are and at what point you are in your search.
Makes sense.
For sure. Well, I got to tell you, I so appreciate just those different suggestions and just helping our listeners understand the process a little bit more. And really, I think if anything, it makes it seem more obtainable and more of a process that is not going to be difficult. It's not going to be like going to the dentist. I'm not going to diss on dentists out there listening, but
some people aren't fans.
But some people aren't
right.
fans, and I think I really hope that listeners realize that we want to be partners with them in this process and help them achieve the goals that they are setting for themselves and their family. So. Thank you so much for being on our show and helping with that and answering those questions.
Definitely opened my eyes. So
Yeah.
I learned a lot just sitting in this conversation.
Hopefully we've taken the scary myth out of getting that first mortgage. So.
For sure.
For sure. So listeners, remember, whether you're pre-qualified and ready to start shopping or just starting out and have questions, you can head over to lmcu.org/mortgage. On our website there, you can find out more about how you can finance that dream home you've been wanting, and also connect with several of our expert loan officers that could be right around your corner in one of our local branches. So check us out. So awesome. Well, that ends this portion of the show, but we are going to be heading into our most favorite part, where we get to ask some trivia questions.
Yeah. My anxiety level is raising as this music comes on.
Already nervous about the trivia.
Yes. Well, and we are excited because Kelsey is going to be on the hot seat again with you because she won last time, and the pot now is up to $100. So for listeners that may not have heard us before, how this works, every podcast, there's $50 up to grab that can go towards a nonprofit that we support. As again, we are all about that kind of way of helping the community. And if we win, it goes up to 100, and it goes up to 150, and it pools up and keeps compounding until one of our guests win. So, without further ado, let's get started.
That's the scary music.
That's the scary one.
Is there like a buzzer or something here that I need?
Yeah, so
Or-
let me kind of break down the rules here for you. Here's how it works. We will have a race to the best of three. Each of you will buzz in with your name. So you will just call out your name, and the first person to do that gets the chance to answer the question. If you get it wrong, the steal is on the table.
Okay.
And it will give the other person an opportunity to get the point. So, tiebreaker will result to a few additional questions if we have to as well. And let's see if we can win $100 for a nonprofit today, Meg.
No pressure.
No pressure.
No pressure.
No
Sorry, it doesn't go away
pressure.
if you lose.
Okay.
All right, here we go. First question. What MTV music show premiered in 1998?
Crickets.
Meg. Real World.
I'm sorry. That is incorrect.
I was 5 in 1998.
I wasn't sure when I was pulling these questions. I had to remind myself of that.
No clue.
Do I get a second guess?
You can, but it won't count.
Okay. I don't know the name of it, but they were sitting the couch thing with the remote control.
Oh, there's that one as well. I can't remember
No?
the name of that one, but what it was, the answer is Total Request Live, TRL, with Carson Daly.
Oh, yeah.
Yes, that
No.
actually started in 98.
Yeah.
I would have been 4. I definitely didn't know that.
Yeah.
Well, the show was on for several years after, in fact.
I was an
Okay.
avid watcher at 5 years old.
That's the biggest
And I was
going
going to say my excuse is I had a newborn. So we've got a 4-year-old, a
There you go.
5-year-old,
There you go.
and I had a newborn. So
There you go.
there's my excuse for not knowing.
All right, that's okay. There's plenty of other questions left.
I hope they get easier.
That was the easiest
That
one.
was
They don't like it worse
easiest
here.
one.
Okay.
All right. What was the name of Ross and Monica's dog when they were kids?
I should know this.
I think we rewatched all of Friends during quarantine,
Yeah,
too.
I've watched all of Friends like 17 times. This is so specific.
I'm not even guessing.
Yeah. Sparky?
Oh. It was Chi-Chi.
Oh, man.
Oh,
Chi-Chi.
That sounds right, but no, wouldn't have gotten that.
No, that was not even.
That's okay.
No, not at all.
All right.
You can give us another Friends question.
Yeah, the
Yeah.
question should have been, what are all the friends' names?
Yeah.
Okay.
That
Thank
we
you.
could have done.
No.
All right. All right. So here's where we stand. We have asked 2 out of 3 questions.
0
The
to 0.
score is still 0-0.
So what if you
It's a
ask the
barn
third
burner.
and we both don't know?
So this is going to go one of 2 ways. Either one of you is going to win, or we're going to be having to ask another question. So let's see what this question brings.
We're really good at this.
All right.
Hey, it's a lot harder being on this side of the microphone than that one.
That's true. I get to
Okay.
actually see the answer.
Yeah,
You're
okay.
right.
Yeah.
That is true.
I want to
It's
come
neck and
back
neck.
Yeah.
and ask the questions next time.
We would be happy to have you back to ask the questions. That would be awesome.
Okay.
All right. Last maybe question. What was the first feature-length Disney animated film that was released? It's a weird way that this sentence said.
Kelsey?
Kelsey?
Snow White? Yay!
That is correct.
The longest pause to find out if I was right or not.
That's impressive.
It was Snow White.
I was obsessed with Snow White as a kid, so that's the only reason I know that.
Well, and I had some other tough ones here coming up next, but I probably had a question that both of you probably would have gotten because it's a little more modern, but I'm going to just give it to you.
Okay.
What was the number of Twitter's original character limit?
Oh,
Wow.
140 something.
Paul, you're open?
140? Was it 140? Now it's 280.
I want to say 98.
Okay.
Oh,
one
the
of you.
original
One of
Twitter.
you is correct.
I don't think it's me.
You're correct. It was 140.
Okay.
So
I was like, maybe there was a shorter character limit before 140 that I'm not aware of.
I don't use Twitter. I
don't either.
So
Oh man. Well,
Right, you got to make the questions easier.
I
right?
know.
Yeah.
I
No kidding.
I mean,
Yeah.
you got to know your
Who's
I
audience.
the
threw a
boss on the
friends
office?
question in there. I thought that was going to be a
very specific
Yeah.
one.
okay, that's true. But all the other ones were so like easy. Like, what's Phoebe's song? You know,
Smelly cat.
that's why I didn't ask it. Although that could have been fun to see who gets the buzzer.
Yeah, then it's a game of who can answer it faster.
That is
Yeah.
true.
Right.
Well, I might have to change my tactic for next podcast. So for those listeners, check out the next one. It might just be a little more heated.
One of the
So-
listeners is probably screaming out Chi Chi in their car because they know.
They know. They're Chi-Chi, come on. How do you not know that? Yeah. So anyway, thank you again, Meg, for being on the show. That means $150 now for the next guest that we have on the show. The pot will just keep building up until that point, and we'll make that donation to one of our nonprofits. But yes, thank you again.
You're welcome. Thanks for having me.
It was so much fun. We'll have you on
was.
again for sure.
Okay, sounds good. Have a great day.
Yes, thank you so much. And just for everyone listening, be sure to subscribe, follow, share. Let people know that you like what you're hearing on Wallet Wisdom. We want to also hear from you. Remember, Wallet Wisdom is designed for you that are listening. We want to help break down any questions or topics that you want to learn about and explore, and we want to be able to help with that. So be sure to leave us a comment. Let us know what you would love to hear more about and certain topics.
Thanks for listening. The information provided in this podcast by Lake Michigan Credit Union is general education or marketing in nature and is not intended to be accounting, legal, tax, investment, financial, or other advice. Statements of individuals are their own, not LMCU's. All topics discussed are information of a general nature and do not address the circumstances of any particular individual or entity. Consult an appropriate professional concerning your specific situation. As of the date of publishing and any future date this podcast is broadcast, all rates, fees, payments, or other specific figures discussed are subject to change and are dependent upon your specific financial situation. All loan products discussed are subject to credit and collateral approval. You alone assume the sole responsibility of evaluating the merits and risks associated with the use of any information or other content in the podcast before making any decisions based on such information or other content. In exchange for listening to the podcast, you agree not to hold LMCU, its affiliates, or any third-party service providers liable for any possible claim for damages arising from any decision you make based on information or other content made available to you through the podcast. For more information on any of the content discussed in this podcast, please visit lmcu.org. Copyright Lake Michigan Credit Union, federally insured by NCUA. Equal housing lender. LMCU, NMLS ID number 442967.